Good morning, everybody. My name is Valdemar Jesler. I'm with the Brazilian Chamber of Commerce. I'd like to welcome everybody to this event. I would like to thank Susan for having us over this beautiful office. Good morning and welcome. I'm Paulo Villa and I chair the Capital Markets Banking Committee of the Chamber. Anyone here who wants to join, please let us know. We'll be looking for new members. Together with my co-moderator, Elsa Chapanesi, we would like to thank Don and Gabrielle and Susan and Patcha for hosting us this morning. As the world faces so many challenges, Brazil looks rather good in the picture. The economy performed better than expected in 2023, as did labor markets. It must be said that this was partly a result of surprising events. The prospects for 2024 are more cautious, but not bad. Growth could be around 2%, with decreasing inflation. The trade balance is expected to remain strong, with exports topping $300 billion for 3 years in a row. This is mainly due to agribusiness and commodity exports. Nothing wrong with that, except that the Lula administration doesn't like it. The policy gurus at the National Development Bank, who have been influential in all past administrations of the Workers' Party, are convinced that only the expansion of manufacturing can bring about the structural changes needed to transform society. And now they have redoubled their praise in industrial policy. Now that is, when industrial policy is prized and cheered by the G7 and viewed with encouragement by policy partners. It would be wrong to think, however, that these developments dominate public policy. My sense is that right now, they are on the fringes of a practical political reaction to a new alignment of powers, where congressional authority is much more aggressive and controlled by local concerns rather than by ideology. They are outside the locus of powers at the Ministry of Finance. It is outrageous but laughable that last year the Syndicate of Professional Economists elected Dilma Rousseff as the Brazilian Economist of the Year. It also doesn't really matter. The outcome of the new industrial policy is likely to be wasteful but small. For sure, this year, yet again, the market will be fixated on fiscal policy. It is the big unknown. There is no question that the current fiscal formula, which assents to larger spending if it can be funded by additional taxes, is an inferior solution compared to the previous tool, the expenditure ceiling.
I think we should start by stating, well, first of all, Paul already said everything I had to say, but if I can try to add something there. In line with what Paulo said, is that Brazil has a growth problem and a fiscal problem, and at this point, some people consider this a chicken and egg situation, although for me it's still quite clear that the genesis of our problems remain mainly on the fiscal side, and I'll explain why. I think it's important to keep in mind that Brazil just had a second lost decade in the past 4. So basically, originally we would call like the lost decade. It was in the 80s, right? Like when average GDP growth was 1.7% a year. But in the 10 years ended in 2012, we managed to grow only 0.6%. That's a third of what the lost decade was at the 80s. What this means, adjusted for the project, is that we had another decade of stagnant per capita income growth. And this obviously is a big pressure on Lula to deliver going forward, because it was during Lula's first 2 terms from 2003 to 2010 that per capita income grew 26%. So there is expectation there for reform, but there are very serious constraints structurally for the economy to grow and deliver that kind of performance. Obviously, when Lula first came to power, China was growing 12%, we had a commodity super cycle and conditions that are no longer in place. adjust again for the population, there is a very small upside to per capita GDP and for the well-being of the population. The economists tend to think of three ways to boost structural growth. One is through labor, adding more people into the labor force. The other is capital investments, and then you have productivity, which is a combination of labor and capital inputs to produce growth. Unfortunately, Brazil demographics won't help going forward because the population is aging, so the pace at which new entrants join the labor market continues to decline. So that component is not where a significant improvement is to come. And that leaves us with growth, capital investments, and productivity. And obviously, that demands resources, right? And the issue in Brazil is that the investment ratio, like investments to GDP, never really recovered from the highs that we saw through 2014. And this remains the challenge now, right? But to the point where Brazil continues to be a country with low savings, in part because that is drained by persistent fiscal deficits. We have this competition for the allocation of resources that does not favor investments, and that hurts the prospects for GDP growth. Just as an example, and we saw very large numbers yesterday. We're still waiting for the final numbers from the ECB, but last year, even with the economy growing 3%, which is quite above potential, we likely saw a nominal fiscal deficit of 9%, which is insanely high. Yes, there are others and one-offs here and there, but even when you cling to those, our expectation for this year and next year is that nominal deficits will remain in the range of 6 to 7%. I'll get into the effects that this will have on people in a minute. But the point here is just that this competition from the fiscal drainage, right, the deficits compete for money that could be better allocated elsewhere, that could be put to more productive functions and benefit structural growth. And we're not seeing that. I don't want to sound too negative, but I think the good news is that some recent reforms can help GDP growth over time. It's very hard to precise their effect thus far. We know that they move the needle in the right direction, even if we cannot quantify at this point by how much. But some examples would be Timmer's labor reform that we saw. There was also pension reform in 2019, the BNDES reform that reduced subsidized lending, things that were trying to basically improve the labor and the capital allocation of inputs there to translate into higher growth.
So from a rating perspective, starting off, we upgraded Brazil in December to double B. And I, have a stable outlook on it, so went from a positive outlook, upgraded outlook back to stable. And my colleague, Rebecca Safone, head of our group, when he put out our sovereign ratings outlook for 2024, it was entitled, Mixed Feelings. It's as trying to capture some of the complexities that we see in the ratings trends global, so the global rating trends outlook. Where if we look back at what happened in 2023, moving into 2024, we had over 137 ratings, sovereign ratings globally, just over half are investment grade. We had 17 upgrades, that includes Brazil, that was the last one at the end of last year. And we had 10 downgrades, so upgrades outpaced downgrades. But negative outlooks dominate positive outlooks. And so we're kind of think about perhaps some adjustment post-pandemic, but the trends in some sense are tilted down, notwithstanding the upgrades that we have. This is a global pattern, right? And one of the concerns we have across the sovereign rating universe, especially in the advanced economy universe and also large caps, the very low end of the rating spectrum where there's less space on the fiscal side, right? We're concerned about the fiscal trajectory, big picture, right? Debt levels have come down from peaks, this broad brush statement, right? From the pandemic. but they're still higher than pre-pandemic. And we have higher interest burdens, and that's hitting the entire rating spectrum. If we look at interest payments to the revenue base, because of where the debt levels are, and because of where rates have gone in the global environment and locally. So this means some less kind of space and needs some warning ahead of us. So that's this concept of mixed signals. Notwithstanding more upgrade than downgrade, we have a negative balance. So when it comes to Brazil, I think that it applies, that title applies nicely. We upgraded, we have a stable outlook, and there's some very positive things, but there are also some that's counterbalance, right? We do have a stable outlook, some questions on the downside. Looking at the rating construct, the strengths in Brazil's rating are clearly its external position. If you look at it, comparatively, from, the early 2000s, night and day, okay? We have debt, the way we look at it, external debt of the entire country, so public and private sector. Taking away international reserves is, let's call it zero, right? Or maybe even a net creditor, okay? That, and the buoyancy that, we're seeing on the external side with, the strength of the export base that Paolo highlighted, Roberto highlighted, commodity driven or not, this reinforces a very solid external position and a floating real, that all of this gives a lot of external flexibility. Okay, that's a key strength. I would say the other key strength in the rating is the monetary policy construct and track record. Okay, it's not the way we kind of have a number assessment for each of these. It's not quite as strong as the external, but it's up there. Okay, and here we have a track record of inflation targeting, a floating exchange rate. This all comes together. Deep global capital markets, comparatively speaking, especially with the region. And again, compared to the region, not necessarily with advanced economies and some other emerging economies. But and you have a track record on inflation targeting bit by bit. Obviously, questions at the beginning of the Lula administration about signaling of the target. But you saw the target, reinforced last June, May, and expectations are you're going to come inside the target of 3.25 and the band over the coming years. So there's some anchoring there, although we're above it, kind of now. And you have passage of formal central bank independence. You can have formal independence and not operational independence, right? So the fact that there is a strong track record of operational independence with some ups and downs in there, but a reinforcement on the legal independence side is something we would look, we look at favorably. But if you have formal and a poor track record, Argentina doesn't make it. That's a negative, right? So here, I think the track record on the monetary policy side is positive, and the central bank formal autonomy reinforces that. What I would say is in the middle ground for the rating is our view of the institutional assessment. And it's why I say that the score is sort of in the middle. There's many checks and balances, vibrant press. I think the shift that we've seen that Paolo alluded to or Roberto alluded to, a Congress that is more center and has more power and helping to add, it feeds into the variety of checks and balances that at the end of the day, from our point of view, keep policy on balance pragmatic, slow, right? You've got the detailed constitution that limits the speed at which you can make key changes. The weaker part and why the institutional assessment is not stronger is that you haven't been able to tackle the fiscal. And the way we look at it, and what do? We're rating debt, right? And ability to pay debt. That piece of the puzzle that we had weakened over time is still hitting our institutional assessment. That said, it's in the middle of the range. Could it be better if you started tackling fiscal more? that's one of the reasons a committee decision could advance there. But you haven't. But you have seen pragmatic policy on balance, and I think we've seen that reinforced. And this leads into the key weaknesses, but which includes growth and fiscal. The variety of reforms passed since the Temer administration that Roberto alluded to, they're listed practically identically in our last press release, in terms of what we put out in December. Some steps on the pension, labor, what have you, Van Dyess reform, central path to central bank autonomy, all of these things key, and they show an element of pragmatism. And the tax reform approval, and there's also an element of pragmatism. Okay, but you still have a technical fiscal. And the key weaknesses in the rating and what hold it are the fiscal, which has the lowest scores you can have, and our lowest assessments you can have, and the growth. Okay? So tacking on, go to growth first, what Roberto said in terms of the lost decade. On Latin America in general, the three largest economies in the region all have what we say below average growth. So we look at where their level of per capita GDP are, we see how they grow. They grow subpar. If you flip to Asia, it's the reverse. For the level of per capita GDP in Asia, because of all the various other strengths, they grow higher than their peers, and that's a positive for their rating. So here, Brazil's rating, middle incomes was on the lower side, but it's pulled even lower because of the subpar track record. And that is a key issue for the rating, and I would say, it anchors the rating, keeps the rating where it is, and changing that is something, improving it is something that's a key element to upside in the rating.
When we think about the Brazil real right now at 4.95 or so, we believe actually that there is a larger probability that we end the year at stronger levels, between current levels and 4.75, 4.75. And the reason for that is, although we are seeing, as Roberto highlighted, we have lower expectations for growth in Brazil, and the expectation that the central bank will continue to ease monetary policy. That's happening elsewhere, and in particular when you look at the US, the consensus is looking for US GDP growth this year around 1.6%, and somewhere around 125 basis points of the rate cuts from the Federal Reserve. So that scenario is actually an interesting scenario for currencies like the Brazilian real, because the pace of rate cuts that Roberto is expecting would still put the real interest rates for Brazil around 6% plus. And if we do have the better external conditions that Lisa mentioned, and I fully agree with that, combined with an inflation in Brazil that's expected to be closer to 3%, we have a scenario here that if we have external flows, the currency actually is very well shielded from tail events. And in terms of tail events, what would draw our more rosy scenario for Brazilian assets off track here, we like to think about what people call the dollar smile, right? So if we have a model scenario for the global economy, the Fed and the ECB easing monetary policy, subpar global growth, another recession, that's normally a positive scenario for high carry currencies like the Brazilian real, given that we're not going to a recession or expect a recession in Brazil. If the US economy is much stronger than the market expects, the Fed delivers a more protracted easing cycle, or if the US economy is much weaker, so you have like these two tails of the dollar, you tend to have a stronger dollar. So these scenarios are less likely, in our opinion, for 2024, and that should shield the Brazilian real and also allow for some gains on the bond market. In particular, discussing the currency, what is very interesting, Paulo mentioned in the beginning that Brazil is about to have a 300 billion plus export in 2024. When we look at in detail where this money is going, we notice that exporters have actually kept this money offshore. So when you think about where the Brazilian real is trading right now, I'm going to use again, in real effective exchange rate terms, it's pretty much close to where we were in the early 2000s, despite the fact that the external balance is much stronger. So there seems to be a shift in the behavior of locals in Brazil, that they have a much larger dollar exposure in their portfolios at this point. And you can see, you can think about that in terms of the half glass full or empty, whether Brazilians are more skeptical about institutions and they want to have larger savings offshore, or as a shield, which combined with reserves that are almost close to 400 billion. Brazilian assets abroad, liquid assets abroad, are very large at this point. So even in the tail events that the Fed does last and the market is expecting, or if we get a global recession that the market is not expecting right now, it seems that the reality is well shielded for that. So if you compare the current exposure of locals and the high carry, that's a combination that over time, and that has been actually tested over time, is a very powerful combination for strong returns over 6 to 12 months.
We see lots of airlines with a lot of noise, but there's some errors in this mess. One is that the most important one is that power has gravitated away from the executive towards the courts and Congress. That's one thing to always keep in mind. And of course, the executive is smart enough to realize that. And they have been working with leaders in courts, Supreme Court in particular, and with leaders in Congress. So what we've seen over the past months is that the government has made progress in easing the tensions and getting more support from the courts. That's one thing. The second one has been tentative, but the leaders of the Senate and the Senate are to be elected, newly elected. The government is working on these choices. So as a result of that, what we expect going forward is that they will transition with into 2025, 2025, with more support from both sides, but not enough to push a more aggressive ideological policy. So I think we will see pragmatism still, not at the speed we would like to see, but more balanced, I would say, region of power and relationships between the executive, sharing, and executive house. So that's what we need to keep in mind. So it's not going to be ideal, but it's going to be less nice. On policies, of course, they tend to be a little bit of politics. And unfortunately, and the press here in general, this populist leaders that have been elected across the world tend to be charismatic, some narcissists, and unfortunately, oftentimes they're much more concerned about rewriting history than writing a better future in general, about the Brazilians in particular. And that tends to influence policies a lot. So policies become less pragmatic because if you want to rewrite and cover mistakes from the past, and that's your objective, rather than for more efficient policies that promote faster growth, you know that you won't get there. So when you look at this dual-aligned way of doing policy in Brazil, I think there's some of that. Part is more concerned about rewriting history than so I would say that despite pragmatism and efficiency, policies will be underlined by this orientation, which again is ideology and their views. People tend to want their policies and ideology and they look for the data that corroborates what they think. So that guy that needs to be 110 and smoke and drink all this out there, yeah, it's not that data point, that's absolutely not to me, right? So unfortunately, there's a lot of that going on now with new industrial products and rebuilding refineries, etc. So I don't expect that to change, but I think I would like to focus on the strength of the country. That's what we need to understand. Bring it up is that Brazil, or many other EM countries, the business sector is a survivor. So it's a survivor that has excelled throughout many governments that have been working, unfortunately not in their favor necessarily. So you have strengths in commodities, others that are great. Unfortunately, it doesn't employ that many people. It doesn't pay that many people, but it's very efficient. Commodities, oil production is going to be, it's going to almost double, and exports will more than double by 2030. It has two important implications. Revenues can increase by almost a quarter GDP, and trade balance will be around 100 billion for another 5+ years. So, despite our policies such as strength, several areas of the service sector are also very efficient. Though macroeconomists tend to look at the macro picture, but in the average of all that, policies that are out there to grow, ones that are not aimed at efficiency, etc. Sectors that are protected shouldn't be protected, industries that should be protected should be, and yes, even agro commodities, some areas of industry and services. The average is not great, but there's in a country that big, there are many opportunities. So that's one thing I'd like to a few things I'd like to highlight is that by all this that unfortunately is unnoticed, which is still has been stressed because it's an industrial opportunity and has been under here.
Thank you very much, and thank you all for coming. This has been a real pleasure.